Hey, welcome to the Home Buyer Seminar. I'm Bill Gross, along with my good friend and lender and colleague.
How's it going? Shannon, the lender.
Now I have Patricia today, but I had a question, and Shannon's the perfect person to answer this. Many people, on their own can't qualify to buy a house. Maybe they have income they don't report. Maybe they don't make enough income, but they have the assets. Maybe they have the assets, not enough, maybe enough income, but not enough assets. And so oftentimes they'll have other people come on the loan with them and be a co-borrower. So Shannon, what are some of the issues related to having a co-borrower help you buy a house?
Yeah, so I think you said what are some of the issues?
Mm-hmm.
Yeah, yes. I think as a co-borrower, obviously one of the main issues is it's going to show up on your credit, right? So if you are planning on buying another property, right, you have to be mindful of this will show up on your credit. And if you are looking to buy a home yourself, you have to look into, hey, when are you buying that house? Because if you just co-sign for someone, that could affect you. Now, I know there's a rule if you can prove that someone else has been paying for that debt for at least 12 months, you could potentially write it off, off of your DTI. But that is a big concern. Number two, you got to make sure whoever you're doing this with is trustworthy, because the whole purpose of a co-signer is, hey, you vouch for this person, you vouch for them so much that you're willing to put your credit on the line. There's a whole purpose of it being a co-signer. Right. So that's something that you want to really watch out for is, do you trust this person? Can they still pay the debt, even though, again, maybe you're not living there? Because as FHA, you can have a non-occupant co-borrower as a co-signer, right? So they don't need to necessarily live there for you to for them. So that is a good thing. But still, you are still on the hook for it. If they have a late payment, it's going to show up on your credit. If they default, it's going to show up just as much on their credit as much yours. So right. This is obviously the biggest thing you want to look into is, do you trust that person to really co-sign for you? And again, even if you're looking to buy a house yourself, there's going to be additional documentation that they're going to need to prove that, hey, you're not living there. This is not your house, things like that. I know that though, with FHA, you can technically only have one FHA loan at a time. Now, the way I've been able to get around this is usually if you are a non-occupant co-borrower, right, you don't occupy that property. And I've had this happen to people out of state, right? They help their family from another state help qualify. Obviously, if you fall into that 100-mile radius rule, right, that can also help out in terms of if you're looking to qualify for FHA yourself. So that is a positive thing, is that, hey, if you are 100 miles from that property, you can still co-sign for someone else and still get your own property FHA.
How many times in your career have How many times in your career have you sat with a borrower and they didn't realize when you pull their credit that there were several or more or significant late payments related to somebody they co-signed, maybe a car for or a house? And I've had cases where somebody went from qualified to not qualified just because of that.
Yes, twice. And one of them was mainly a car. It's mainly been cars, honestly. It's funny. The corporates never, in my personal experience, has never been houses, right? Surprisingly enough, if you co-sign for a house,
it's a car.
Exactly. Usually, when the house situation, people are way more responsible. I'm not going to say everyone, but for the majority of cases that I've seen, people are way more responsible when it comes to houses. But when it comes to cars, for some reason, I see lates a good amount of times. Lates, repos, man, you name it. I've pretty much seen it when it comes to car co-signing. So honestly, you're right. When it comes to co-signing, I've seen so many horrible stories about that.
Yeah, and I think if you're going
a lot of times. Oh, go ahead, Bill.
I'm saying if you're going to co-sign for somebody on a mortgage, usually you have to be on the property too, right? If you're on the loan, you're on the property ownership.
Exactly.
And so I think you have to have some, now you have to have some agreement on what happens if either one of you wants to sell or either one of you passes. People think about that. they do it as joint tenants. Well, that means if somebody passes, everything goes to the other person. I've seen people have the husband qualify with the father-in-law, right? The daughter didn't have the income or had bad credit.
Oh,
The
wow.
father was a cosign, and they called me, and I said, actually, it was the father and the mother because they were married, and the mother passed. And I said, do you understand that if the father passes, the husband gets all the house because you're holding as joint tenants. There's no, and he didn't hold it as community property. So you need to talk to an attorney about this. But my suspicion is this isn't the outcome you want. So you have to think about the ownership on title and also think about the money, because you're responsible for the payment. You maybe should set up a joint checking account somewhere where you can verify and then get online and verify the payments or the late payments. Because if you're signing for somebody for a, $500,000, $1 million liability, you better follow it. Better make sure there's insurance. You better be on the, insurance policies are co-insured, and make sure you get online access and notified of any statements there. It's not insignificant, co-borrowing, is it?
Yeah, exactly. But you brought up a good point before, is the person who is buying the house primarily, the co-signer is going to have some say in the house. So you better make sure that relationship is good with that person, because that's a lot of things people don't talk about. Now, I definitely want to talk about the positives, right? Because I would say out of 10 people I qualify, 8 of them is with someone else, right? It's rare that someone qualifies by themselves. It does happen, but rare. Seeing the other way around too, where no one wants to co-sign for this person, which, hey, maybe they know about something about this person I don't. But here's the other flip side to that coin, is that, if you're advancing as a family, sometimes it is a team sport sometimes. And hey, you scratch my back, I scratch yours maybe, or hey, let's co-sign, get you a house. Once you're established, you can get me off and I can get a house, and maybe vice versa. But, in today's economy, I'm seeing it, like I said, it's extremely rare that someone's doing it by themselves. So learning how to work together, and this is a good point too, people are very easily convinced to co-sign for a car, but when it comes to a house, an actual asset, for some reason, it's a huge thing. I hear a lot of people, oh, well, I don't want to give up my first-time home buyer coupon, right? I don't want to do that with me, which is a valid point. It's a very valid point. And especially if you go FHA, there's a lot of loopholes you got to get through if you're going to also get an FHA loan yourself in the very near future, especially I would say in the next year or two. If you're planning on buying and you're like, you know what, me and my wife, me and whoever has plans, that makes sense. That does make sense. But, I had my wife's family who came here in the 70s. They all, 3 families came together, bought this duplex, cashed out, refied. The other family got a house, and they just kept doing the same thing, right? And now, they all own properties within a 3-block radius because they were able to work together. Now, ask me if the kids are willing to do the same thing. Not so much, right? They're like, oh, we want their own space, we want to do this. But at the same time, hey, your parents all came together, huddled up. Everyone lived in a room, right? And they made it happen. So, there are a lot of cons. Sometimes you have to work together in order to climb the ladder, especially buying an asset, right? For some reason, when you're buying a car, a liability, or co-signing on a credit card, it's like, hey, no problem. But when it comes to buying an asset, everyone has an issue, right? Which I'm not saying there shouldn't be valid concerns. When you are co-signing, 1,000% we're warning you, right? Make sure that person is responsible. Make sure, like you said, you have a joint account. You're monitoring those payments, making sure you're getting those email notifications too. When you make those payments, usually these loan servicers email you saying, hey, you're confirmed, your payment confirmation is there, things like that. Because the late payment doesn't start, right at the payment date, right? If your payment date's the 5th, you're not going to get notified that there's a late, a few days after, right? It usually takes a month or 2, sometimes even 3, for the loan servicing company to actually charge as a late. So the late doesn't come up right away. So maybe have that conversation with the owner saying, hey, look, if you're not on time with your payments, let me know. Let's work this out. But I'm seeing a lot of people not willing to work together, to make this happen. And again, you guys are buying an asset. It's not a liability, right? Yeah. So at the end of the day, if something happens, you guys can divvy up this asset. But working together as a family, even as friends, right? Friends group, you guys are willing to come together to go on a trip, right? Let's come together to rent an Airbnb. Let's come together and buy an asset. So I do want to shed some light on the positives, because there are some negatives. Let's not mislead anyone. It's not like, hey, co-sign for everyone you know. I'm not saying that. I'm just saying, hey, go ahead.
Well, I'm gonna say, if you do co-sign for somebody, you should at least have a written agreement as to what's going to happen. I think it's really important.
Yeah.
That control, things can change. People get incapacitated, people get sick, people lose interest, people get divorced, people die, unfortunately. And so, my father's an attorney. I always felt like, oh my gosh, why do I have to plan for all this stuff? None of this is going to happen to me. Well, things do happen. I look back at my life, and if planning to fail is failing to plan is planning to fail. And I think particularly if you're going to co-sign, it can be a great opportunity to help you get a house. It's a great way for parents to help their kids perhaps get in a house. But if you're going to do that, you got to protect yourself and protect them. And I think that think those things through. There's some basic rules. Have an agreement in writing. Maybe have an attorney look at it as well, or at least walk through with somebody who can explain to you. Realtor should be explained to you the types of title options you have, and then if necessary, talk to an attorney to make the right decision if you need some legal assistance. But I know I never needed anybody to co-sign for my house. When my father, when we were first married, suggested maybe we need help. And he said, I just want to let you know, if there's ever a disagreement, I'm going to side with your wife, because he liked her a lot more than me. So again, these are things that you don't really understand, those relationships, but definitely look into it. I think the other part is, I think Shannon would say, get informed information. Just because somebody wants to help you in co-sign doesn't mean they can qualify, because they may themselves have their own debts and income issues and so on. So definitely get with a loan officer. If you can't qualify for as much as you want, ask about co-signing and see if there's some options that can help you qualify for more. How's that sound for advice?
Yeah, no, that's great. And also too, check the other person's credit. Ask, hey, what is your credit? I mean, if I were co-signing, I would definitely do that. I would say, look, let me see your financials. Let me make sure maybe it's income, right? Maybe you just, hey, you can't qualify for the amount, right? And that's another topic, right? Hey, can you actually afford this house? Even though on paper I am co-signing. Or maybe you want a better rate, that's fine. But, if your FICO score is, 600, 580, why? Why is that? And, know who you're getting in bed with, for sure. And so, that's one thing I would say is, for sure, look at that person's credit. Because 9 times out of 10, if they're asking you to qualify, that means that they've already done the qualification themselves. So they already have their credit checked. The loan officer knows what their credit is, but ask them, hey, I want to see what your credit is. Why it's that? Or they could be, hey, they could be at 700. They could be great. They could be, no late payments, which will be comforting for you. That's number one. Number two, I love what Bill says, is look at how you guys going to invest this. Are you guys going to do joint tenants? What is the other one? Tenants in common, right? Are you guys going to do a trust after? And how is that trust going to be structured? Right? How work all those things out ahead of time. If you're late, what happens? If you can't have the money, what happens? How are you going to get off the co-signing situation? Right? That's another thing. How are you going to get off once you're on? Because, hey, I got you that, but now how am I going to get off? Which is probably a little bit of a harder conversation. Exactly. LLC. Maybe, hey, if there's a certain amount of equity.
And you can get a trade.
Oh, perfect. I love that.
Yeah.
I love that. I love that.
So just to wrap up on that and to kind of make a quick point, interest rates. Funny how they're not really moving much. They did go up a bit when things broke out in Iran, and you might think every day you hear the news, there's bombing, the rates might go back up again. No, not really. The bombing stops. You think the rates might drop tremendously? No, not really. Oil's come down, at least in my neighborhood, by about $1 a gallon from the high where it was. Doesn't mean it's still higher than when we started. Yet still rates seem to be at the Fannie Mae acceptance say 6.57, about the same where it's been for weeks. 30-year fixed rates. What are you running 30-year fixed rates at today, Shannon?
What are rate them?
No, what are you writing them for? What's the interest rate somebody's going to get if they're applying for a loan today? Or an
Oh,
FHA?
okay. I would say with FHA, you could still get in the fives. You're still like 5.7, 5.6 if you have a really good FICO score. And then conventional, yeah, you're in the low mid sixes right now for sure. If
Yeah.
you're an investment loan, you're probably looking at the high sixes, low sevens.
Still real good for buyers. Take a look at those numbers.
Yeah.
Make sure you have an updated number if you've been shopping for a while. I have a escrow where the buyers panicked because the rate lock expired and they had to relock it. And the lender's going to charge them a relock fee. The rate's the same as they were then. I said, well, just expose yourself to the new rate. And by the way, if they're going to charge you more now, change lenders, record close for 2 weeks. I'll work with you on that. But it's one of those things where I think sometimes some lenders try to take advantage of the borrower if you're not informed, and some of the loan officers are trying to make extra money, and talk to an honest one that's reputable and going to work with you. And Shannon's one of those people. So that said, Shannon, let's wrap up here. If someone wants to get a hold of you, what's the best way to get in touch with you and talk about mortgage rates or do they need a co-signer?
Yeah, and just on that note about the same, because I actually had the same situation with Patricia on a client where the rate lock expired and they were going to charge them. And that's one of the benefits of working with a loan broker. There's pros and cons with everything. I'm not going to sell myself that loan brokerage is the end all be all. But one of the great things is we're loyal to the client, not to the bank, right? So we can easily switch over and say, hey, we're not using this bank. We're going over another bank. You know what I mean? I want to get you the best pricing, the best fee. And I had a client do that midway through. Hey, some other bank is offering a way better rate. We're probably going to start over again, but hey, you're going to get that better rate. And luckily, like you said, the seller was able to work with us. Took about 2.5 weeks to close it additionally, but hey, everyone's happy. Client got the rate that they wanted. Seller got the property sold. So everything worked out. So exactly Bill's point. It's a good reason why to have a loan broker, because regardless of the bank, our interest is the client, right? My interest is not the banks itself. So if you want to reach me, 661-317-8484 or my Instagram, FUND with Shannon, get you qualified within 24 hours. We can talk about scenarios. I've even be willing to talk to any co-signers, sit down with them, let them know the pros and cons to co-sign if that's something that you're interested in. I also speak Spanish too if you need some help with that as well. So back to you, Bill.
Fantastic, Shannon. And I'm Bill Gross, at Bill Gross Pro and social media if I can help in any way. As always, we do this every week, a new episode. Today we talked about co-borrowers. If you know some of the topic you have questions on, reach out to us, like this, send some comments out, send some love out to Patricia. She got tied up helping a family member today. So shout out to her. We miss you. We'll see her next week. Thank you so much. Make today your best day ever. Thanks.